This is the Daily Market Comment by Marios Hadjikyriacos. I'm Maria Pashurthis. Thanks for joining us at XM.com. After cruising higher without any significant corrections for 3 months now, the U.S. equity market finally suffered a meaningful setback on Thursday. The S&P 500 lost 3.5% and the Nasdaq was down 5% as investors dumped tech darlings like Apple that have been powering this mystical rally all along. There was no single catalyst to blame for the sell-off other than the increasingly unrealistic valuations in the tech sector, setting the stage for an eventual reality check. For all the risk aversion in equities, the currency market barely felt the reverberations. Defensive plays such as the franc and the yen did gain some ground, while commodity-sensitive currencies like the Aussie and loonie retreated, but all these moves were modest in size. The dollar barely managed to score any gains despite the sour mood. Nerves have calmed on Friday, with most currency pairs trading in tiny ranges and without any conviction, while futures point to a flat open on Wall Street. Overall, there is no sense that we are staring into the depths of the abyss like back in March or even June, though whether this correction still has some mileage in it might depend mostly on the U.S. employment data later today. The U.S. economy is forecast to have recovered another 1.4 million jobs in August, which would push the unemployment rate down to 9.8% from 10.2% previously. This dataset will capture the mid-July to mid-August period when several states rolled back their reopening plans and crucial jobless benefits expired, so investors will be on edge to find out whether all this held back the labor market. As for the reaction, the risks surrounding the dollar and stocks from this dataset seem asymmetric, with the potential disappointment generating a bigger negative reaction than the corresponding upside one in case of stronger numbers. In the big picture, U.S. employment reports tend to be more of an intraday volatility event nowadays, not something that generates lasting market trends. As such, this dataset is unlikely to change the broader dollar-hating, stock-loving trend at play. This is today's Daily Market Comment. Thanks for joining us at XM.com.